Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir, and I'm speaking with Leon Coetzer, who's CEO at Jubilee Metals. How are you today, Leon?
I'm doing great, thanks, Zach.
Right, yesterday we had an update from your company with lots of good bullet points as far as the news was concerned. Quite a few, in fact. What for you were the highlights of yesterday's revelation?
Thanks, Zach. Yeah, I think 2 points stand out for me. One is that, of course, another significant step up in our earnings growth, nearly 50% growth on the previous 6 months, but more importantly, nearly threefold higher than the comparative 6 months the previous year. We have, it's our sixth period of 6 months that we continuously grow with double-digit earnings. And I think the second point that stands out is the fact that as much as our earnings have jumped up by 50%, it doesn't yet reflect the earnings that are coming through from our new operations that were commissioned towards the end of the period. There's only 2 months production reflected into that 6 months period earnings. So, if we stand still and do nothing, one can expect yet another jump in earnings for the next 6 months period. So I suppose those are the 2 key points that really stand out from what the team has delivered.
And what do you say to, I think there was, let's say, a cynicism maybe that there's not that much capacity or that much money in the tailings business. Do you have an answer to that?
Well, I suppose our numbers speak for itself there, Zach. If you look at our margins, to compare that to a traditional mining operation, our PGM space is running on plus 50% margins. If you look at our earnings per ounce that we are delivering, it is significantly higher than an underground mining component because, of course, we don't have that cost or risk component. And we're sitting as a company, if you project forward, on the PGM space, on the PGM ounces we are making, we are targeting to be a company over the next 12 months to exceed 60,000 ounces of PGMs. That's very competitive and big in anyone's mind. And if you step into our chrome business on that debate, we are probably one of the only chrome companies currently in the industry that are profitable. And the reason why we are profitable in such a soft chrome market is because we aren't mining. We are very efficiently processing metal out of tailings. So I suppose the numbers really speak for themselves.
Also, as far as the numbers are concerned, probably one of the few positive stories of the year to date has been the surge in PGM prices. Yes. Clearly, that is a positive to you. Could you underline how much of a positive it is at the current levels?
Yes, very much so, Zach. You're quite right. PGMs are performing exceptionally well. Palladium prices, rhodium prices, ruthenium, all running very strong fundamentals, pushing those prices up, which we expect to remain. It has a very big impact on our earnings at the moment because we couldn't have timed better the commissioning of our Windsor PGM project. It's a very large project where we're processing 100,000 tons per month of material through the refining facility. That is, set to produce north of 4.5, even up to 5,000 ounces per month. So you can see the higher PGM prices will strongly reflect into the next 6 months period because that operation commissioned last year and hit stability last year, November. So definitely those higher PGM prices will reflect strongly in the earnings of this next 6 months period.
You've talked about the last 6 months. What about the next 6 months in terms of the development of the company?
Yeah, so just to reflect, if we, beyond all the new projects also being planned for this 6 months period, the last 6 months, of course, at the latter part, so it's the November period, a few very significant projects came on stream. We have the Windsor PGM project coming on stream, so those earnings will be more strongly reflected in this period. We had, of course, Inyoni, which is our other operation. We commenced the production of chrome, which is our own chrome from that facility only during the end of November. So those earnings will only start reflecting in this 6 months period. So you have 2 earnings drivers on top of our current announced earnings to come through in this period. Of course, also we announced that in Zambia, our Sable Refinery, we've commenced the production of copper from from that refinery. That circuit's now up and running, and we've made export A-grade copper. So the first sales will start coming through in this period. So those three things will automatically already be positive in our earnings. And beyond all that, we, of course, are in the throes of the construction of our zinc circuit in Zambia. So over this next 6 months period, the shareholders can expect to see that zinc circuit coming on stream. And we're starting to produce zinc and copper out of our Zambian refinery. So a lot on the cards for the next 6 months period.
And, of course, if there are new opportunities that you find, you could seize the moment on those as well.
Oh, very much so, Zach. So the nice thing of being a company that is in profits, making strong cash flows, is that your balance sheet is not strongly leveraged at this point, and that which means we are perfectly positioned to capitalize on the market, on industries where metal prices are slightly softer, where distressed assets are coming available, and with our ability to in-house develop processes, implement and commission them, we really are well positioned to capitalize on such opportunities, and we're actively pursuing such opportunities.
Leon Coetzer, CEO of Jubilee Metals, thank you very much indeed.
Well, thank you, Zach. Thanks for the opportunity.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.